Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? See, I always say today because then you can't tell. Am I recording this at night? Is it 2 in the morning? Is it 8 in the morning? Is it right before the closing beat? Hey, anyways, today we're going to talk about a study that we're doing here. One of our research associates asked the other day, hey, if the government's going to bail out all these companies, would that not make a good stock investment? And we said, well, let's take a look. Let's go back and look at all the other companies that have gotten government assistance or bailouts over the last, 30 years. And let's see if there's any correlation. Should you own that stock and how does it perform going forward? So I'll share some of that data with you here today as we go through this. The bottom line is, it is a very tricky thing to do. You look at names like Chrysler. Remember when Chrysler got bailed out in the late 70s, I believe it was? Yeah. They did well initially. So stock price did well initially and then faded away and it underperformed by about 60% relative to the stock market. So the argument today is, should you invest in this stock or should you just go invest in something else or the stock market or build your own portfolio or the S&P or the NASDAQ or the Russell or anything else other than these stocks that have government assistance? Here we go. So the first thing, I'll give you just some of the ones we looked at and I've pulled them up on the charts here to kind of show you. If I take a look at AIG, here's AIG the day before the bailout. So this was, I started the date on a Sunday, on a Monday. They were bailed out on a Tuesday, 9/16/2008. You could see that AIG had a wild ride. That's your gold line there in terms of chart performance. I share the chart stuff with you guys because it's just visually something to see rather than stare at a bunch of numbers. So you look at AIG outperformed. In fact, if you look out the first week, it was 35% better returns than the S&P 500. Remember, they got that bailout. It was like 180 billion, something like that. It was really ridiculous there. Anyways, if you look out 1 month, you can already kind of see the performance bleeding off there. The performance lagged the stock market by 13 percentage points there and got worse and worse over time there. If you were to go out over this time period, well, let's just do 9/15/2008 to 9/15/2010. Oh, there we go, right in there. So let's just say a 1 year time period, it lagged by over 60%, right? So obviously very exciting on the bailout news, and then it just started to fade away. It was not a worthwhile investment. This is just one example. If we go over to Citigroup, Citigroup was one that got bailed out, the old 08 financial crisis there. And this is a little bit different story. So Citigroup initially just blasts off, in fact, outperforms in the first week. So if you bought it and then a week later you sold it, you had a 108-point difference or 108 percentage point difference between the S&P 500 and Citigroup. So sounds like it would have been a smart idea. However, it then fades away, right? Fades away little by little. And if you were to go out, even just 1 month time period there, let's go to 2009, we'll say November 24th, right, to go a full month or year, you underperformed by about 30%. So you'd have been better off just being in the S&P or even the NASDAQ or something, right? I'm not trying to just tell you guys like, let's go NASDAQ 100 total return on there as well. Oh, it won't plot for some reason. I don't have it saved in there, but you get what I'm saying. I'm not saying that it has to be that you be in the S&P, right? You'd have done better, it looks like, in the NASDAQ. Maybe you'd have done better in the Russell 2000 as well, given that we were coming out of that sort of downturn there. Yeah, you'd have done better in the Russell as well. So it's not the S&P. I just mean, should you invest in the stocks getting government assistance or not? And that's a few examples that really kind of highlight how it's tough sledding in there, as I like to say. In fact, if you look at every single one that we studied there, you've got the median performance, right? If you look at every single stock that's been bailed out by the government, the median performance there is that it will underperform the S&P 500 by 30 percentage points in a 1 year time period. So if you see things like American Airlines, Carnival Cruise, and you think that it's a good investment because of the government bailout, you've got a 60% chance that you are going to underperform the S&P 500 using those stocks by 30 percentage points or more, right? And so there you go. That's 6 out of 10 or a 60% chance there, no matter how you look at it. So government assistance stocks, you can see they're more short-term right? Maybe if you want to trade them and take your chance there. I'm not telling you what to do, but if you want to take your chance, it's more of a trading vehicle than an investment. Statistically, you're asking for a little bit of trouble there. Anyways, just a quick one. Wanted to share with you there on a Friday. We went through a whole bunch of great stuff for that. But there you go. What do you think? Are you building a portfolio of stocks that are getting sort of assistance from the government in one fashion or another? If so, let me know the portfolio you're building. We'll track it going forward. Maybe we'll visit it every month or something on these videos. We can build portfolios and just kind of track the performance with you. But I don't think many of you are going to be too excited to do that after watching this video. Hey, we'll be back later to do the closing beat. Thank you so much for watching here today. If I can help you in any way, you know where to find us, jazzwealth.com. You can schedule a call with us to get some more information about how we do things. But we'll see you on the closing beat later, and enjoy the rest of your day. Thank you. Thank you.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.